All right, I believe that we can start. Hello, everyone. I really hope that you can hear me. As of yet. All right. So what we are here discussing today is the USA retail sales, and as you can see on my screen, at the current moment, the forecast stands at minus 0.2%, while the prior figure was 0.2% plus. Well, let's talk a little bit more about the projections and also the history of the indicator. Here is very important to mention that the consumer spending has been steady lately, offering convincing evidence that recession risk for the U.S. remains very low. Retail sales in January rose for the fourth month in a row, delivering the longest run of increases for the monthly comparison in the nearly 2 years approximately. But the streak of monthly gains is expected to be cut short in today's report for February. The crowd looking for a mild padback of 0.2% compared with January based on the Bloomberg consensus forecast. If the prediction holds, the retail sector will suffer a round of razzing for the first time since the last September. And a slight setback wouldn't derail the positive trend, even assuming that 0.2% decline leaves retail spending ahead by 4.1% relative to the year earlier change. In that case, today's numbers are expected to show that the year-over-year pace is at its highest level in more than a year. As such, economists are telling us that the upbeat trend for the retail spending is set to remain intact in today's data, even though the monthly numbers may be on the soft side. Moving forward, as always, we have the experts and their projections and estimates on the matter, and of course, Bloomberg survey summary that is based on their views. So according to them, the median estimate is at minus 0.2%, average estimate minus 0.14%, the highest estimate is 0.4%, while the lowest estimate is minus 0.7%, and the total number of estimates according to Bloomberg reached 80 for this time. Let's see if I have some quotes here from different banks or financial institutions. And of course I do, because here comes the quote from the research team at CDS. They suggest that weaker auto sales and falling gasoline prices should flatter U.S. headline retail sales lower in February, while the risks to the total retail sales forecast are titled slightly to the downside, owing to the uncertainty surrounding the performance of the auto sales. However, TD Securities say that they really see the balanced risks to be on consensus call for the respectable 0.2% month-to-month advance in core retail sales activity. And of course, last but not least, turning to Dukascopy community member sentiments on the US dollar Japanese yen currency pair, we see that our traders are rather bullish on the matter, 55.05% bullish votes versus 44.95 bearish ones. Of course, we have a couple of comments here. I'm just going to zoom in. The bearish comment says that with a slight disappointment regarding the reaction of the market to the monetary policy of the BOJ, looking forward the core retail sales, but expecting a bearish movement in case of good figures. And I guess that's basically, I don't have any time left. So if Max is ready, then you can just break the ice and proceed with his topic. Please.
Thank you very much, Kate. Hello, everybody. I hope you have a great Tuesday so far. Moving on to the technical part for this particular data release, of course, on the US retail sales. for February, we have the negative surprise trading strategy today, just because the expectation for both headline and core readings for retail sales are suggesting that the retail sales declined by 0.2% for both readings, and it will be worse than the result we have seen 1 month before, when retail sales, in particular on the headline basis, increased by 0.2%, and also the core retail sales had showed some positive movement as well. Speaking about the strategy itself, we have the cable for the discussion right now, because this currency pair continues to have very bullish sentiment on the sterling at the moment, and which means that the bias towards the greenback remains quite negative right now. Apart from bullish sentiment, which is positive in almost 61% of all the cases, I should point out that pending orders, which are set to sell or buy this currency pair, are actually pretty much favoring a positive scenario for the foreseeable future of this particular cross. You can see that more than 86% of all orders in 50 pip range from the current spot price are placed to go long on the UK currency against the US dollar. And mentioning of course, the market sentiment provided by other market participants, at the moment it is quite mixed, because Saxa Group traders are going short in 52.48% of all the cases, while Oanda and Daily Forex traders are still positive on the UK currency and short on the dollar. Speaking about the current market situation, as you can see, the pair is trading at 1.4170 level right now, and of course is usually to forecast the possible market reaction after the data is released. Let's have a look at the previous reactions for the same data release, which were on average 25 pips in the last 5 months from now, so from October until February. Although I should also note that in the past 2 months the reactions were lower than the average, actually in the past 3 months from December until February. Therefore, we also can expect some smaller reactions, especially considering that everyone is now focusing on the Fed, the meeting which is taking place tomorrow, and not everyone is going to pay attention to the data which is going to be published today. We also have the PPI index, producer price index, released at the same time, and also the Empire State Manufacturing Index for New York, and it would also be quite nice if we can receive those numbers in the chat section in 1 minute from now. In case we indeed have the negative data on all the fronts, so from retail sales part, from the PPI part, and on the Empire State Manufacturing Index, we can see the pound rising in value eventually in 1 minute from now, and the first take profit level for this purpose stands at 1.4194, which is the first weekly resistance for this particular trade. Since I have just 30 seconds to go, let me mention the first stop loss level. It is placed at 1.4140 level at the moment, with additional one some 15 pips below it. And as for the technical indicators, at the moment they are supporting the bearish scenario for the UK currency, so they don't agree with our market sentiment right now. But let's see what the numbers are and what the initial market reaction actually is. I hope we will get the numbers in a couple of seconds from now. We don't see for now that much movement from the pair at all. It might happen because, as I have already mentioned, everyone is just now turning its attention to the Fed meeting. Well, as for the retail sales, they are released slightly better than expected on both headline and core basis. They declined, although by 0.1%. It was better than expected by minus 0.2%, and it also seems to be a reversal from the January readings when both retail sales indicators actually had increased. Unfortunately, we don't have the data on the Empire State Manufacturing Index. Kate, probably you can have a look at them if you can, just at some economic calendar, and just publish short numbers in the chat section. But as far as I'm concerned, no movement from the pair suggests that there are no surprises from either positive or negative side. I think the Empire State Manufacturing Index was expected to improve slightly in March to minus 10 points, which is still a contraction for the production sector in the New York State. Yes, and Kate has published the numbers. Thank you very much. So 0.6, the Empire State Manufacturing Index, which is actually a kind of surprise, a positive surprise. But still no movement from the dollar so far. The pair has just decreased slightly by some 6 to 7 pips in the first 2 minutes of trading. Possibly we will see some movement a bit later, but most importantly, of course, let's wait for tomorrow decisions and press conference of Janet Yellen and the decisions of the FOMC committee from the Fed. But for now, I guess that will be all from my side on the technical part. Thank you very much for listening, guys. I hope you have all a great day ahead. See you all tomorrow. And back to you, Kate. Thank you.
Thank you very much, Max. So yeah, guys, you can see that retail sales month-on-month data came out a little bit better than expected, but then they were revised to minus 0.4, as well as the core retail sales also in line with experts' expectations on the matter, because they knew that weaker auto sales will definitely impact the auto sales in general. Not the auto, but the retail sales, of course. Again, thank you very much. Thanks for joining us. Thanks for the discussion, and see you tomorrow with another data release. Basically 2 of them tomorrow, I guess, and also the webinar. Thank you very much, and bye for now.